What's up, traders? So today I'm going to show you how I make over $1,500 per week off of 2 stocks alone. And not only will we go through the stocks, we'll look at a potential trade on the Moomoo platform. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I've been blessed to be able to use the stock market as my personal money printer over the last several years. But before we begin, if you could hit that like and subscribe button, that just helps push this message out to more people. And also do remember that I am not a financial advisor and this is not financial advice. All trading comes with risk, and this is not a recommendation to buy, sell, or hold any equities or options contracts. Now, before we begin, I love to share scriptures that have to do with money, wealth building, and business. And today's scripture comes from Deuteronomy 8:18, and it says, "But remember the Lord your God, for it is he who gives you the ability to produce wealth, and so confirms his covenant, which he swore to your ancestors as it is today." All right, so if you've had the ability to build wealth in the past, if you are currently doing it, or in the future, it will all come from God. You know, I do remember a video that I made maybe just a few months ago, but somebody commented and they said, "Man, I really love your videos. You've taught me so much. I just wish you would tone down the God stuff." And when I read it, I immediately became confused because knowing what I know, I'm like, well, that's ironic because God is the one who gave me the information and the skill set and the ability to teach you what it is I'm teaching you. And so quite literally, he was the reason that you were even interested in this video to begin with. Because had he not given me that skill set, then you wouldn't be wasting your time watching the video. And so in that case, he should probably want me to talk about God even more. But that's the scripture for today. I hope that blesses somebody. And speaking of blessings, there are a ton of people that are absolutely winning within the Trader Freedom community. So just yesterday, we can see Hector posted one contract away from a 1K day. One of my best days so far. Thank you, Rashad. Looking forward to consistent growth. And you can see he made $960 in one day. And so he is part of our Zero DTE program, which is for day traders. And he joined, I believe, I want to say maybe 3 weeks ago, max. But as soon as he entered into the community, he started digesting the material. And he's been making more and more every single day and just consistently progressing. So shout out to Hector. And then Keisha, I believe she's been in the community for less than 2 weeks now. And she says, "First win with a credit spread with Google. Thank you, Rashad, and the community, specifically Terrence, for the visuals. I am learning so much." Now with Keisha, I absolutely love seeing this because she actually joined with much less in her account than what we typically recommend. And she immediately came into the community and made a post and said, "Hey, I don't have as much, but I'm looking to learn and I'm going to make the best of this opportunity." And we can see that she is off to a very great start. So shout out to you, Keisha, for the very first win. And there is a lot more where that came from. And then we have Cody, who I forgot to shout out just earlier this week, but he said Zero DTE weekly profits of $3,840. This was for last week. He said, "This is using 8 contracts per entry with a width less than 90. I did hold to expiration on all but one entry. I am thinking I will increase to 9 contracts sometime next week. Rashad, thank you for sharing your wisdom." And Cody's been in the community for several months, and he is actually making so much money that he reached out to me saying that he will be potentially opening up an LLC because the money is flowing in so rapidly. So shout out to Cody. But if you would like to join a great community, we would love to have you. We have strategies all the way from Zero DTE for our day traders up to monthly income for our people who are much more busy throughout the day. But you'll get to see my exact trades when I enter them. You'll get my full options framework via the Trader Freedom course. You'll get access to ask me questions at any given time. And lastly, you'll be within a community of other traders who all have the exact same goal as you. So if you would like to join us, the link is below in the description, but let's get down to business. Now, if you're not new to this channel, then you absolutely know that I love the wheel strategy. And I love the wheel strategy because I love consistent and reliable income every single week, every single month. All right, I'm not like other traders who buy a call on a stock and just hope and pray that it goes up. I want to know how much I'm going to make because I live off the money that I make from the stock market. And so I need it to be both consistent and reliable. And so for any beginners out there, the wheel strategy is just selling a put in order to buy a stock at a cheaper price and you're getting paid for it. And so an example of that is, say a stock is trading at $100, then we could come in as the put sellers and then sell a put at anywhere underneath where the stock price is trading currently. And all we're saying is, hey, we will buy the shares of the company if the stock price were to drop below our strike price. And so essentially it's kind of like we're giving insurance to whoever is the option buyer. But as long as the stock price stays above the strike that we set, we just keep the money we were paid and we go about our day. However, if the stock price were to drop below the strike that we set, then we still keep the money. However, now we just need to purchase the shares of that stock at the strike price that we selected. So we sell puts and we get paid for it. Now, we could do that step over and over and over and over again. But once the stock price actually does drop below our strike price and we get assigned, which just simply means you have to buy the shares, well, then we'll turn around and sell covered calls. And when we sell a covered calls, that is just us agreeing to sell those shares that we already have now at the price that we selected. And you guessed it, we still get paid for that step as well. Now on the covered call side, if we own the shares here, but we sell a covered call at the higher price, then if the stock price rises above our strike price, then we have agreed to sell those shares. And for doing so, we still keep the premium. However, if the stock price rises but doesn't go beyond our strike price, then we not only get to keep the premium that we were paid, but we also get to keep the shares, and we can do that step over and over and over again. But once we're actually forced to sell the shares because the stock price went up, then we have officially completed the wheel strategy. And that's why it's called the wheel strategy. We can just do those 2 steps over and over and over again. And that is the strategy that I will be utilizing today. But now let's go ahead and take a look at the stocks that I'm referring to. Now, the first stock is BITX, which is a leveraged ETF to Bitcoin. Now, as we all know, the current administration is very bullish on cryptocurrency in general, and they have been passing legislation that makes cryptocurrency even more useful. Just recently, a bill was passed that we can now use the balance we have for cryptocurrency when we're applying for a mortgage. And so I believe over the near-term future, things will only get better and better for cryptocurrency. And of course, with Bitcoin being the main star of the show, they will benefit greatly. And of course, as we know, Bitcoin is up tremendously, but this is a leveraged ETF that follows Bitcoin. And so it is a 2x leveraged ETF. Now, if you're new to leveraged ETFs, they simply aim to deliver a daily multiple of whatever stock or index that they follow. And so since this follows Bitcoin and it's a 2x leveraged ETF, if Bitcoin were to move up 1% for the day, then BITX would move up 2% for the day. And the same goes for reverse. If Bitcoin were to move down 1% for the day, then BITX would look to move down 2% for the day. And because of that, it is obviously a lot more volatile. And the more volatile a stock is, the higher the premiums are, which as option sellers, that's exactly what we want. Now, when it comes to leveraged ETFs, they are amazing for short-term trading. And that's exactly what I use them for. I'm typically trading them about 1 to 2 weeks out. But what they are not good for is for long-term growth. And the reason for that is because they rebalance every single day, they typically always lag whatever stock or sector that they follow over long periods of time. Okay, so no to long-term trading with leveraged ETFs. However, for short-term, they are perfect for just that. Now, we can see that this ETF has about $3 billion worth of assets under management. And now if we look down here at the implied volatility, it's 79%, which is pretty high, which is exactly what we want. So let's go ahead and take a look at the charts. So looking at the black lines here, we can clearly see that the Bollinger Band expects it to stay in between a price of $55 to $67 currently. So the Bollinger Band just aims to show you the price range that a stock is expected to trade within. So that's good to know. And then also we can see that we have the moving averages down here. So the purple line is the 50-day moving average and the blue line is the 200-day moving average. And so there are several levels of support. However, what I want to point your eyes to is that if you notice, the stock price went up and then hit around $60 and then bounced down for quite some time. But something else I want to point out to you is a good level of support or resistance. And so to make it easier to see, I'm going to go ahead and remove these other tools. All right, now if we go all the way back to January, we can see that the stock price came right under $60. And then on the very next day, it tried to pop back up. However, it hit 60 and immediately started selling off. And the sell-off happened for months, and then it recently came back up. And it hit around $60 and it bounced right back down. Then it went up and down. But now we have closed above the $60 price for several days. And what used to be resistance can now be support. And so I believe that it will take a lot of selling pressure in order for BITX to drop down below $60. So I'm going to keep that $60 mark in mind. And then the next level of support will be around $55 because that is the bottom of the Bollinger Band currently. And so knowing that information, let's go ahead and place a trade. And real quick, I have to give a huge shout out to the sponsors of this video, Moomoo. Beyond being just an amazing platform, if we scroll down, right now they have one of the most amazing welcome offers ever. You can get up to 60 free stocks when you open up an account and put money in. And that's all you need to do. You don't need to put in any trade. You don't need to invest. You could just open an account and put money in it and you can get up to 60 free stocks. But on top of all of that, their mobile platform is next level. Taking a look at their mobile app, so you can see here, you can see a lot of general information such as earnings and earnings calendars and earnings beats and economic calendars. However, what I like most is this investment theme. So if we click on investment themes, here they categorize stocks based on what they're impacted by. And so what I like most is this one that's called Nancy Pelosi Portfolio. Now, if you're not familiar, Nancy Pelosi is a US Congresswoman, and she seems to always select the right stocks right at the right time. And so Moomoo conveniently put all the stocks that she is currently investing in right here on this list for you to see. And so if you just wanted to follow what Nancy Pelosi is doing, you could follow this investment theme in Moomoo. But go ahead, check it out. The link is below in the description. You can get up to 60 free stocks, and you can only get that with this link. So go ahead and click it, and you can thank me later. All right, so now I'm in the Moomoo platform, and I want to go ahead and search for BITX. And so now we're at the options chain, and now we need to just select our expiration date. And so for this, like I said, I like to do short-term trading with leverage ETFs. And so I would probably come over here and select either the expiration for next week or 2 weeks out from now. But this video is for weekly income. And so let's go ahead and select the date that is next Friday. Now, Moomoo conveniently places the expected move right here for you to see. And so we can see that the expected move is currently $5.16. And so that would go right in line with what we said of support around $60. And so I want to look at the $60 strike. So looking at the $60 strike, currently will be paid anywhere between $95 and $103 per contract. All right. And that is at a delta of 0.21. Now, for me personally, I like to play it a little bit more conservative. And so I like to build in a little bit more margin of error. So I may come down a little further. So let's go to this $59.50 strike, and that'll pay us anywhere between $75 to $88. And that is just at a delta of 0.18. And so with all the data that we have, that sounds good to me. So I may go ahead and place that trade there. And at the mid price now, it looks like we'll make about $86. So I'll go ahead and select the mid price. Now let's go ahead and take a look at the P&L chart. And so looking here, we can see that BITX's price is currently right here where these dots are. And as long as BITX price stays above our strike of $59.50, then we just make our money and go about our day. All right, so our profit per contract would be $86. Now, how many contracts you should select is 100% up to your account size and your risk tolerance. Because when selling puts, you are making an agreement to buy the shares at the strike price if the stock were to drop down. And so if I am selling a $59.50 strike, then I will be forced to buy 100 shares of the stock per contract if the stock price were to drop below our strike. And so let's go down here and select our contracts. And let's say for the purposes of this video, we'll do about 5 contracts. And so looking at this number up here, we can see that we'll make $412 over the next week from this trade alone, as long as BITX's stock price stays above the $59.50 strike that we set. But I like to spread my trades out. So maybe I'm doing 5 today, and then maybe tomorrow I'll open up a few more, and then maybe the day after that I open up a few more until I get near my profit targets. All right, so as long as the stock price stays above $59.50, we just make our money and we go about our day. However, if the stock price were to drop down, we can see our break-even point is $58.67. And then from there, if the stock price were to continue to go down, then it then becomes a losing trade. However, you don't care as long as you were actually interested in buying the shares of the company, or in this case, the shares of Bitcoin. All right, I have it set in my head that I am absolutely fine with buying the shares at $59.50 if the stock price were to drop down. Because if it does, then I'm going to turn around and do covered calls. And so let's take a look at that side. All right, so now we're back at the options chain, and this time we need to look at the covered call side. And so I'll just come up here and I'll select call now. And so in this scenario, we kind of have to assume. So let's assume that we had previously sold puts on BITX, and let's say we were selling puts at $67. And now the stock price has gone below 67, so now we were assigned the shares at $67. Well, here's where things get fun, because you always tend to make a lot more once you are actually assigned the shares and you do covered calls. And here's the reason for that. Now we can be as aggressive as we want. We can essentially sell covered calls right at our strike price or anywhere above in order to make money. An example of that is I could come back over here and I could sell covered calls for just a week out at $67, which was our cost basis. And you can see that we will make anywhere between $180 to $196 per contract. And that's almost a 3% return in just the span of a week. And so I like to do it that way because I care more about the guaranteed income part of covered calls. Now, what most people like to do is they like to sell covered calls way further out the money, and so that they get the capital appreciation of the stock as well. Because if you recall, when we do a covered call, we are just agreeing to sell the shares at that specific strike price. And so if I were to do a covered call, let's say at $70, well, then I would get the capital appreciation from the stock going up all the way to $70. And then I also still get the premium that I receive from the options contract. But for me personally, I like the more guaranteed income part of it because I know I can always just purchase shares if I really wanted to hold on to the stock. All right, but let's say we are going to go ahead and sell our covered calls right at that $67 mark. And so I will go ahead and hit the bid price there. And at the mid price, we'll make about $189 per contract. And if we match the same amount of contracts that we did before and we do 5 contracts, we can see that would be $945 for selling that contract. And what will happen from here is if BITX's stock price went above the 67 mark that we set, then we keep the premium we were paid and we sell our shares at that price. However, if BITX does not move above our strike price, then we still keep the premiums we were paid and we also keep the shares, and we can follow this process the next week and then the following week and the following week after that, and it could just continue to keep going. All right, and so that is one of my favorite stocks to do weekly income on, but the other one is ticker symbol TQQQ. So just like BITX is a leveraged ETF to Bitcoin, TQQQ is a leveraged ETF to the NASDAQ 100. But this is a 3x leverage ETF, so it would look to move about 3 times the movement that you would see QQQ move in a day. And we can see that this leverage ETF has $27 billion of assets under management, and it's not as quite as volatile as BITX at an implied volatility of 45% right now, but it's still about 3 times more volatile than the NASDAQ 100. So let's go ahead and take a look at the charts. Now we can see that the Bollinger Band says that it will stay between a price level of $82 and $88, and it looks like it's making 2 different levels of support here. And so let me go ahead and remove these other indicators. We can see that it's kind of made support right here at this $82 range, with all of these days kind of bouncing right off of it. And you can see an extreme bounce off on this day, but they all bounced off of $82 and it has gone higher since then. And then right below that, we can see that there was a bounce off at this $80 mark. All right, so we will keep both the $82 and $80 marks in mind, which are backed by the Bollinger Bands, but let's go ahead and head right back into the Moomoo platform. All right, so let's follow the exact same steps that we did for BITX. So I'm going to select next week's expiration date. And remember, we saw some support levels at both $82 and $85. And so let's just go right in between that and select this $83 strike, and we'll get paid anywhere between $78 to $82 right here, right now for opening up this contract. And on top of that, at the $83 strike, if we look over here at the expected move, this strike will have us outside of the expected move as well, as the expected move is about a low of $84 currently. All right, so $83 keeps us out of that range while giving us a good amount of premium. So let's go ahead and select that. Now, we could easily just go ahead and sell the puts. However, if you wanted to, if you have a smaller account, you could easily turn this into a credit spread by buying any put that is lesser than the strike you are selling. All right, so we will buy a put that is anywhere under $83. And so let's say we're going to do about a 5-wide credit spread. And so I may come over here to the $78 strike and I will buy that one. So let's go ahead and add that to our ticket. And what you can see is that it reduces the amount that you will make. However, it also vastly reduces the amount that you need in your account in order to place the trade. Okay, because you can see if I remove that and we just sold the put, we would need $8,220 in our account to do one contract. However, if I go ahead and add this long put again to turn it into a credit spread, well, it took the amount that we need from 8,000 something to $446. All right, so that is a drastic decrease in the amount needed in order to place the trade. And that's why credit spreads are often very advantageous for people with smaller accounts. And that is exactly how I grew my account as well. I used credit spreads and iron condors for several years as I grew my account. All right, but this video is about the will strategy, so let me go ahead and remove that credit spread and we'll just keep it to the put sell. And if we come over here to the P&L curve, and let's go ahead and do the 5 contracts again, we can see that as long as TQQQ stock price stays above the $83 put that we sold, then we would collect the $400 right here, right now for placing the trade. And then of course, if it were to drop, then we are agreeing to buy the shares at the strike price that we selected. But now let's go ahead and assume that we were assigned the shares and look at the covered call side. So now same thing, we're looking at the call side now, and let's assume that we were assigned shares at $90 and the stock price is currently at $88. And so what I could do again is come over to this $90 mark and I would go ahead and sell covered calls and do the exact same amount of contracts that I did for the put selling side. So we can see that we will collect anywhere between $187 to $191 right here, right now for placing this trade. And if next week TQQQ is above $90, then we just agree to sell our shares. However, if it is below $90, then we keep the premium we were paid, and we also get to keep the shares that we have, and we can do the strategy over and over and over again. And ladies and gentlemen, those are 2 stocks that I use in order to bring in a ton of weekly income, but there are a ton more that we trade within the Trader Freedom community. So if you do know anybody who would like to join and help jumpstart their wealth building, tell them about it. The link is below in the description. And do make sure that you take huge advantage of the deal with Moomoo right now, 60 free stocks just for opening an account and putting some money in it. The link is below in the description. You have to use the link, but I will see you guys in the next one. Peace.